Hey guys, Crypto Sunday, and yet another red week. Not exactly huge, about 3.5% compared to sort of stocks. That's not all that bad. S&P and Nasdaq were both down about 3.5% during the week. Sort of ended a little bit higher than that, but yeah, so it's about 12,000 down. It's sort of across the board for the most part. Bitcoin has sort of held up at 84,000, did drop to 76 during the week, so that was a little bit rough, of course, but that is sort of pushing a 30% correction. Still got potentially green shoots. People are sort of pointing out the M2 global M2 money supply is increasing. I think off the back of the German stimulus and Chinese stimulus as well. Just sort of money flowing into the economy, sort of out of thin air. And yeah, the if you look at the Bitcoin price, a lot of people are sort of overlaying the global M2 chart. And showing that it sort of follows that with a bit of a lag. And, it's already bottomed a little while ago and has been turning up for the last couple of months. So people are sort of expecting Bitcoin to bottom out here. Some people saying M2 maybe isn't the most sort of useful metric to use, and it should be slightly different. But yeah, we'll have to see. Looking at the CoinShares report, I knew this was going to be a fairly red one. Not quite as bad as last week, but yeah, it's 874 million in total outflows. This has pretty much all come from Bitcoin and Ethereum. 756 million out of Bitcoin, 89 out of Ethereum. We sort of kind of know most of those from the daily ETFs. But 1.6 million into the multi-asset fund. That's good. Always seems to sort of stay relatively stable. 16 million into Solana and 5.6 into XRP. I think it's first week for quite a while that Solana has had more than XRP, so that's interesting. 2.7 million into Sui as well, but outflow out of Cardano. 19.8 million outflow out of short Bitcoin, so people closing their shorts. Presumably, there's only 107 million in assets under management on the short Bitcoin, so whether that means people are closing their shorts or whether this is part of sort of the basis trade and people were using ETFs for shorting as well. I don't really know. By country, it's sort of a bit of a mixed bag. Small outflows out of Australia and Brazil, a little bit out of Hong Kong, obviously large one out of the US, but bigger inflows into Canada, Germany, and Switzerland, with a little bit into Sweden. But yeah, nothing above sort of 15 million, so these are fairly small. We're going to get another negative CoinShares report, of course, because we have had more outflows pretty much all week, except Wednesday. Small net inflow, courtesy of ARK. Funnily enough, we got outflows out of all of them on Monday and Tuesday, pretty much. BlackRock sort of seeming to got rid of their, strength, you could say. Outflows pretty much every day. Outflows out of Fidelity. I do think it's worth remembering some of this could be hedge funds and sort of the people call them delta neutral, price neutral type people, just doing the basis trade. So we probably shouldn't have. I think I made the point we probably shouldn't have been paying quite so much focus on some of these inflows when they were going in. Saying that those people are potentially shorting futures and buying the ETF, and that's price neutral. And now on the way out, potentially some of these are hedge funds that are selling the ETFs and potentially buying the futures, so keeping the price steady. There's a lot of people sort of focusing on this, saying people were, buying the top and selling the low points now. It's not necessarily that. It's, potentially people that don't care about the price and just, back at where at the highs it was sort of 15, 20, 25% annual sort of rate on that price neutral future arbitrage trade, and now the price has come down, maybe that rate has come down to sort of 10% or under 10%, and people aren't willing to do it anymore. So they have a price neutral buy the futures back and sell the ETF, and they're not actually what's causing the price to drop. It could be retail that is causing the price to drop. So yeah, I think some people may have a slightly incorrect take on some of these flows. And remembering, of course, that BlackRock, still have like 550,000 Bitcoin in the ETF. Fidelity, I'm guessing are at 150, 200,000. It's not huge amount of selling. They did have an awful lot of an amount go in. I think the crypto are sort of pretty much at or close to the total ETFs in gold, in basically just over a year. So yeah, not too bad. And Ethereum, pretty much the same, negative outflows every day. BlackRock sort of had a couple of 0 days. There's always more 0 days on Ethereum, but they had a few reds. Fidelity was red every day. Not huge numbers, largest was 73 million, but I suppose that's relatively big for Ethereum. And yeah, a few sort of spotty inflows, Vanek and Invesco, but yeah, can't offset this. Sort of reasonably large day from Grayscale. You're still getting that trickle out of Grayscale, which I think you always will. But yeah, people don't want to pay this 2.5% fee, so that'll always be a headwind. Same as Bitcoin. Looks like some large holders on Bitfinex are taking the global liquidity trade potentially as well. Bitfinex are often considered the smarter investors. You sort of look at this chart from the beginning of July. There was sort of a load of Bitfinex people going long sort of increasing quite a lot around September before the election. That was sort of max long point, and yeah, that coincided with sort of the high 40,000s we got down to, it's on the left, isn't it? So yeah, mid 50,000s in price. That was sort of a local bottom, and it rocketed up from there, and then into the Trump election. You could see they were selling off quite drastically, and it reached a low point. Sort of 60,000, 67,000 longs down to 47,500, and they've been increasing quite a bit and increasing dramatically into this sell-off. And yeah, they're now at 67,860, sort of at this low point, and sort of yeah, potentially wondering whether that is this chart. Global M2 sort of bottomed out and has been rising and is sort of almost at all-time highs, and yeah, the thinking is Bitcoin follows that sort of with a bit of a lag. So this yellow line, the global liquidity chart, is sort of going into the future. Obviously this has already happened, and they've pushed the chart forward sort of. This one is 57 days. Everyone's sort of using different an amount to push it forward. 30 days, 60 days, 70 days, to sort of maybe make the chart fit a little bit better. I think that's trying to get the chart fit perfectly is maybe a little bit silly, and a lot of people don't really go back that far on the charts. This only goes back to the beginning of 2024, but yeah, it does seem to, over the longer term follow it. I think trying to fit the chart perfectly is maybe a little bit silly, but yeah, interesting sort of bullish move potentially. The other thing keeping people bullish is stable coins and the rising sort of total market cap of those. Often when you see significant drawdowns, you would see stable coin amounts reducing on chain, and you've been seeing these smash through all-time highs, now at 219 billion. I do think sort of a possible devil's advocate to this is that there could be more people using stable coins purely for transacting and sort of remittance, sending crypto or sending dollars basically back to their home countries, and sort of other people wanting basically to use the dollar as an inflation hedge. Sort of countries like Turkey and Argentina and people like that with huge inflation, they see stable coins even with 0% interest as an inflation hedge compared to their fiat currency. So yeah, if they're not allowed to buy proper US dollars, but they can buy USDT, for example, then they will go into that. So there's potential that this stablecoin correlation with crypto may have broken slightly, because there'll be people that are buying stablecoins with no intention of ever buying Bitcoin or any other crypto. They buy USDT and then go back into their fiat currency, and that's it. So yeah, potentially bullish, but yeah, maybe not the signal that it used to be. Potentially a little bit of good news for the miners as well. A lot of people sort of got a little bit nervy about CoreWeave. Microsoft there was news stories that they were pulling out of quite a few of the contracts with CoreWeave, and yeah, the Core Scientific price dropped on that, thinking that CoreWeave may sort of try to pull out of that deal, and sort of AI, people jump to conclusions. AI deals are sort of largely dead. Riot, and herein and people like that won't be able to get anything. And yeah, CoreWeave sort of denied those claims, and saying Microsoft are still, a strong partner. And CoreWeave have now struck a large deal with OpenAI. Even if Microsoft do sort of scale back, there are other players in the market that need access to power. Sort of showing the charts before, showing the shortfall of power that there currently is in the US. So yeah, there are other customers potentially, and this could be bullish for, as I say, Riot and herein and people like that are looking to make deals. There could be sort of a deal directly with someone like OpenAI, or Meta Platforms or someone like that, or through a third party like CoreWeave. So yeah, potentially not as bad as people were thinking. This was a little bit of a strange one. Binance taking a $2 billion investment from Abu Dhabi's MGX. Gather this is sort of a subsidiary of the Sovereign Wealth Fund, basically sort of owned by the Sovereign Wealth Fund, but not that fund itself. Yeah, have invested $2 billion into Binance. Sort of, as far as I was aware, Binance don't really need this money. They're they are quite cash rich. They were able to pay the $4 billion fine to the SEC in America, sort of relatively easy. Didn't really put too much of a ding in them, so I don't think they need $2 billion, to carry on funding. This is more of a strategic investment. Some people are sort of suggesting this is because Binance are a little bit of a nomad company. They don't really sort of have a headquarters or a place that they call home. So potentially sort of thinking that this investment, would possibly even put them on the Middle East stock exchange if they were ever to float, and they could sort of, call them headquartered in Abu Dhabi. Could see that as quite easily worth $2 billion. And they get a stake in Binance, of course. But yeah, they're still obviously doing well. Have been showing in recent weeks sort of the amount of people getting liquidated, even on the short side when prices are going down somehow, because they take too much leverage, and obviously people that are going long leveraged, they get liquidated as well, and a lot of this money basically flows to Binance and Bybit and people like that. That's how Bybit were able to sort of pay their fine relatively easily. Binance are flush with cash every time they sort of liquidate $1 billion worth of people. So yeah, interesting to see if any more news comes out about this, and what they're going to do with the money. They sort of seem to decline any questions about what they wanted the money for or what this deal is going to do. But yeah, keep an eye out. Still think it's worth, as we're dropping in price, keeping an eye on things like DeFi Llama, just sort of see if price is dropping and people are abandoning the chains, or if it is just prices dropping, and things still looking pretty good. Everyone's sort of incredibly bearish on Ethereum, and you're seeing amidst this downturn, total value locked increasing. So again, in Ethereum terms, if you look at USD, it's down because the price is down, but people are locking up more and more Ethereum in various DeFi platforms. You're at sort of just under 58 million, reach nearly 59 million, and yeah, sort of turn of the year, this was 48 million. So 10 million Ethereum increase. There's only 120 million Ethereum in total, so that's quite a lot. Would see that as positive. Stable coins obviously ramping up pretty hard. Yeah, as we sort of showed before, this stable coins, certainly on Ethereum, seem to take a huge turn on the day of the election, basically. This was sort of 84 billion and sort of rocketed up quite quickly to 110 at the turn of the year. And yeah, this is up to 124 billion now on Ethereum and still rising. I don't think Tron is sort of getting the lion's share of this anymore. Still sort of slightly increasing from the looks of it, but yeah, somewhat plateaued. Sort of 63 billion. They were at 60 billion sort of way before the election. So yeah, the bulk of this is going on Solana or mainly Ethereum, a little bit on Solana. If you look at stable coins on Solana, yeah, you're getting 12 billion. It sort of took a little bit of a drop and hasn't really gone up too much this year, other than in January, where it sort of doubled to 12 billion, but still looking good. Solana total value locked is obviously down in USD terms with the price, but yeah, look, in Solana terms, people are still using Solana up to 113 million nearly, and again, sort of at the turn of the year, this was sort of 100 million sol, now at 112 million. So not quite as much as Ethereum, but still looking good. Obviously, this use on Ethereum still isn't translating into any notable amount burnt. You sort of see I've shown this before, the Ethereum net supply since the merge sort of was ticking up from April last year, and we've had basically a full year now. February, it sort of ticked above where it was at the merge, and it's just continued going up. Look at the sort of last 30 days, it's just straight line up with that tiny little broken line there, and sort of one tiny one here. But yeah, it's largely being gone back to inflationary, you could probably say, for the whole last year. Still far less than Bitcoin, even after the halving. You see sort of April time, you had the halving, and Bitcoin's inflation rate dropped, but Ethereum sort of is still at 0.031%, where Bitcoin's is 1.4. So a lot of people will see this as still good. It's basically net zero for the year. So yeah, it's potential, but Ethereum really needs a lot more use if it's going to get back to sort of proper burning and being deflationary. Assuming people want that. People may be happy with just a lot of people using the chain and it being sort of largely net zero on inflation. So a quick look at coins for the week. We know pretty much everything is down, but by how much? Bitcoin is down 2.3%. Nothing sort of too much there. And now, obviously, at the weekend, you see almost no movement at all. It's been that way for a little while now. And Solana down 3.8%. Ethereum down 12.14%. That's a big faller for the week. Chainlink down 6.6%. Helium up 5.6%. It's the only green for the week. They're sort of usage metrics have ticked up a little bit. It sort of was looking a little bit rocky, and yeah, they've sort of started to look positive again, so that's quite good. Jito 6.3% down, Honey 10.6%, Metaplex 11.7% down, and Radium 5.9% down, with the sort of meme coins seeming to be almost dead. But I'm sure they'll come back, and there will be other uses for Radium. So yeah, we'll have to see. Obviously, that Radium buy was rather poor. That's underperformed even the coins that I sold. But yeah, can't win them all, I suppose. So leave your thoughts in the comments below, and let's see if this global M2 ticks up and we start to look a bit more positive. Like and subscribe, and see you soon.